Hey everyone, Couch Investor here with a late night video. I usually do this a couple of times during earnings season, see how these videos perform, and if you like those type of videos, whether you like them right after the earnings report or right before the market opens, do let me know down in the comments below. But in this video, we're going to talk about Nvidia. No surprises there, beat earnings across the board, revenue, earnings per share, you name it. So revenue came in at $7.64 billion, beating expectations of $7.42 billion. Earnings per share came in at $1.32, beating expectations of $1.22. Guidance for Q1 is strong as well, $8.1 billion versus estimated $7.29 billion. Now, at the time of making this video, the stock is down around 1% or so. Now, you might ask yourself, why is the stock down 1% if the earnings were so good? Well, maybe because in anticipation of this great report, the stock has already gone up around 10% this week. So maybe that's why. We also had a report from Piper Sandler, I believe 2 days ago, where an analyst there reiterated an overweight rating and $350 price target for Nvidia. So that obviously made the price go up a bit. Nvidia also announced a new partnership with Jaguar Land Rover. As part of Jaguar Land Rover's reimagined strategy, this partnership will transform the modern luxury experience for customers starting 2025, so still a long way ahead. Software experts from both companies will jointly develop AI-powered autonomous driving and connected services for all future vehicles built on Nvidia Drive, and next-generation safety and unique brand-focused digital services enabled by Nvidia's AI. So maybe we had a case of too much good news before earnings. Earnings were good. That's why the stock is basically flat, if not a little bit red. Now, I'm filming this a bit before earnings call, so maybe during the earnings call, things might change. Now, I do want to add a couple of words from the CEO, the leather jacket man. So they're seeing exceptional demand for Nvidia's computing platforms. Nvidia is propelling advances in AI, digital biology, climate sciences, gaming, creative design, autonomous vehicles, and robotics, some of today's most impactful fields. Now, with autonomous vehicles, you will see that this segment is actually slowing down. We are entering the new year with strong momentum across our businesses and excellent traction with our new software business models with Nvidia AI, Nvidia Omniverse, my favorite part of the business, and Nvidia Drive. GTC is coming. We will announce many new products, applications, and partners for Nvidia computing. I will try and cover that whenever that comes out. Now, before we jump into the key numbers, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, so first, a quick overview of every segment here. So gaming came in at $3.42 billion, still rising. Data centers, almost bigger than gaming right now. Professional visualization, great acceleration there. And now auto and OEM and others, as you can see, not that great, right? I thought this segment, the auto segment, would actually become a bit better, but it has actually been decreasing for the last couple of quarters. And as for gross margin, you can see here it stayed flat quarter over quarter, but that's fine. It's up 150 basis points year over year to 67%. Was in line with expectations. Operating expenses increased 22%. Operating income increased 76% year over year. Net income 71%. And then diluted earnings per share 69%. Very nice. And as for the various business segments, so the gaming segment grew 37% year over year or 6% quarter over quarter. Data centers will probably become the biggest segment pretty soon. Grew 71% year over year and 11% quarter over quarter. Professional visualization, that's the one with Omniverse, grew 109% year over year and 11% quarter over quarter. And then the automotive part is down 14% year over year and 7% quarter over quarter. OEM and others up 25% year over year, but down 18% quarter over quarter. Overall, everything here grew 53% year over year and 8% quarter over quarter. Now for the fiscal year, gross margin increased 120 basis points to 66.8%. Operating expenses up 27%, but operating income is up 87%. Net income up 79% as well. It has actually been an incredible year for Nvidia. If you just look at those numbers right here, pretty insane. And again, split down to the various segments here, you can see clearly that automotive segment isn't doing great, right? It's the only one that's only up 6% year over year. All the rest up quite nicely. Gaming up 61% year over year. Data center 58% year over year. Professional visualization 100%. OEM and others 84%, which brings us at a total of 61% increase in revenue year over year. So honestly, there's nothing to complain. If it drops even more, it's maybe a no-brainer to pick up some more if you have it already, or maybe to open a position. Because let's face it, Nvidia is probably one of the best performing companies out there today. Now, before we end this video, I just want to show you how much cash they have and then talk about the ARM acquisition not going through. So as for the balance sheet and cash flow, so cash equivalents and marketable securities, we're at $21.21 billion. That's up $11.56 billion from a year ago and up from $19.3 billion just a quarter ago. The year-on-year increase reflects free cash flow generation and $5 billion of debt insurance proceeds. And now as for the ARM purchase, so on February 8th, they announced the termination of the share purchase agreement whereby Nvidia would have acquired ARM Limited from SoftBank. The parties agreed to terminate because of significant regulatory challenges preventing the consummation of the transaction. We intend to record in operating expenses a $1.36 billion charge, the ARM write-off, in the first quarter of fiscal 2023, reflecting the write-off of the prepayment provided at signing in September 2020. Talked about that in my last Nvidia video. This was expected. This is a one-time thing, so don't be surprised when you see that in the next quarter. And as for outlook, as mentioned at the start of this video, revenue is expected to be at $8.1 billion plus minus 2%. Then gross margin non-GAAP still flat 67%, so that's good. And I mentioned here GAAP operating expenses are expected to be $3.55 billion, including the ARM write-off of $1.36 billion. Non-GAAP operating expenses are expected to be $1.6 billion. So to conclude, another great quarter by Nvidia. Execution there has been spot on quarter after quarter. I think the last time they, let's say, missed is probably after the first big crypto winter back in 2018, 2019. That's when the stock actually fell to around $160, $117 or so. Back then, I bought some shares. I already sold. I told this story already 1,000 times. Sold too early because, well, it went up a lot. I thought, how much more can it go up? Obviously, it can go up a lot more. Overall, great company, great quarter, great future ahead. Again, whatever they will mention in GTC event, whatever new product they will launch, I will cover all of that on this channel. Do share your thoughts down in the comments below. And if you like these types of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe. See you all in the next video. Bye bye.